Hi guys, welcome back. Okay, what a day again. The market overall is doing some pullback, but most of the stocks are dropping like bloodbath. So I got a lot of questions today asking me, why is this stock dropping? Why is that one dropping? And they're all dropping like more than 10%, okay? Just give a few examples. Nano Dimension down 9%. Tattoo Chef, TTCF, dropping 11%. EH, another 11%. Skills, another 6%. Open, another 5% down. This one very brutal. Next Tech, ticker symbol NEXCF. Last Friday, it dropped 20%. So I guess a lot of people bought the dip there. And today, another 17%. So it dropped from the highest of 3.7 to the lowest of 1.98 in 1-3 days. And the crazy thing is, everyone asking me why they are dropping. Any news that's happening with the stock. And every time you check the news, there is zero news. Nothing happened. So I am not even trying to explain why all of these stocks are dropping, because there is really no point. I think these days, less than about 1% of people can be making profit more than one day, unless you're a short seller. So today I'm here to give you a few good news. So today Nasdaq dropped around 1%, Russell 2000 dropped 1.3%, and then on the other hand, ARK-K dropped 3%. I think today is the first day for a while that my portfolio is dropping less than ARK-K. So let's see. So on a day like this, it's really difficult to make any decision, because most of the time, like 8 out of 10 decisions you make on a day like today would end up being a wrong decision that you regret later. But instead, I think it's good to take the chance to evaluate the portfolio. A stock that gives you too much anxiety, chances are you don't have that much faith in it. So if you take the time to reevaluate your portfolio and your strategy, it might be able to give you a much more ease of the mind. But you gotta make sure that your decision is not mainly based on the price action at this moment. Here, let me see if I can give you more information. So this is the chart for Nasdaq. This is the September to November correction, and this is the recent correction. Now let's take a look at the PGJ ETF, the Golden Dragon China Power Shares. The heavy position would be Alibaba, NetEase, JD.com, PDD, Baidu, EDU, Bilibili, TAL, etc. These are a lot of the stocks that we have mentioned in this channel, and some of the ones we own, the big techs of China. So now I put in the comparison of Nasdaq to compare the performance of the Chinese ETF and Nasdaq. So we can see that in the past year, the performance of the Chinese ETF and the Nasdaq were quite similar. And then it started to be different here. It was from December last year. So if you remember my previous video, I said that I started to make my strategy of 2021 in December. So at this point, I have decided to go heavy and increase my Chinese position. And after that, the Chinese stocks had significantly outperformed the Nasdaq by a lot. And that's when my portfolio had been growing quite fast in that time. It had more than double in 2 months. Then the correction make it all back down, and then the political issue make it more down. That's why it basically had wiped out the profit I had gained, for the whole beginning of the year. Gone. Okay, so now I need to start over, basically. Like those months just never happened. So we thought that the Chinese stocks were doing not good, but actually it was just running up too fast, so it's gone down much harder. And starting from this point, it was when they start to act differently and have the divergence. So starting from March, we see Nasdaq going up while the Chinese stocks going down. At first, it rebounded with Nasdaq, but starting at this point, it was the beginning of April when we see Nasdaq continue to go up and the Chinese ETF continue to go down. So that's why recently we see a lot of people losing faith in the Chinese holding, and a lot of the comments from before saying how you cannot trust Chinese companies and they have a low valuation for a reason and they will stay low valuation for many years. Especially now Nasdaq had made all-time high, and we anticipate for the Nasdaq to have some pullback or correction further down. That's what I hear a lot these days, to worry that Nasdaq would go down further and have another correction. So a lot of people worry the Chinese stock would go down if Nasdaq go down with another pullback or correction. So let's come back to the Futu chart for the PGJ ETF, and let me hide the moving average, it's too messy. So now, first of all, it looks like it has broken out of this downward trending. So it looks like it has broken out to the upside and back tested the downward trend and bounced off there. So today we see a little rebound. Today the market was down overall and it is up 0.3%. It seems to be staying above this support of $62. Now let's see how important this support is. If we zoom out, we can see that this is at the exact level before the breakout at the end of December. So right now we are at the exact support level before the big run up. So that's why we should have some support here. Is it a very strong support? It's not the strongest one, but it did support it and bounce back off a few times of this support of 61.5. The next support stronger might be this one at 56, because it was the consolidation area for quite some time. We can see this here, it was the top of 2018. There was a crash because of the trade war. So after 1 to 2 years of consolidation, it finally broke through the previous high of 2018. It broke through last year, back tested the support and consolidate more before breaking it through again. So this support should be the stronger one, but we might have hope that it can just bounce off from here, because it already dropped from the highest of 85.9 to the lowest here at 58.9. So that was a drop of 31%. The amount of dropping, it's enough, so it's possible we can bounce off here. But it was a steep dropping, so it might take some time to go sideways, consolidate first. Another thing is, if we look at the Hang Seng Index, we can see that there is a divergence here. Technically, it needs to rebound anyway, and right now we are in the middle of the uptrend, but also at the resistance level. So the best case scenario is for it to consolidate here, gain some momentum before breaking it through. And also, if we look at the US dollar index, we can see that recently it had rebound after a sharp fall since last year because of the quantitative easing. But it looks like we have broken down the trend already. See, this form a bear flag, so it looks like we have just broken down the trend. So if the US dollar continue to go downtrend, that means the valuation of the Chinese company need to go up. That's another good sign for us. And the fourth good sign is I see a lot of people starting to lose their mind on many of the Chinese stocks, and it's usually a good sign like this because some of the stocks won't rise until most retail investors cut loss. Now you might wonder, if Chinese stocks rebound, would your holding rebound as well? First of all, if this ETF rebound, it would be mostly driven by the top stocks holding like Alibaba, JD.com, Pinduoduo, Baidu, and Bilibili, TAL, IQ is one of them too. So then what you should be concerned about is whether the Chinese holding you have would benefit from Chinese stocks rebound, especially the small caps, because sometimes the small caps can be detached from the index or market. Now, if I put it in the comparison, let's compare it with, put an example. I would choose Xiaomi. Let's see if it does the same movement. So for Xiaomi, it's similar movement, peaked in January, but because of the blacklisting news, so it went down, but it rebounded with the overall Chinese stock as well. Now let's choose another example. Let's look at Wimi, for example. So for WIMI, the movement is kind of similar with the overall Chinese stocks, but more exaggerated movement than the big techs, as expected anyways. So when the big techs rise, WIMI would go up more, like this. And when the big techs fall, WIMI can go down more. But overall, the movement is quite similar. Let's take another example of YSG. YSG's movement is not so great compared to the overall big techs. When it was going up, it was also following, but when the Chinese stocks dropped, it went down harder. Rebound together, had a pullback, and YSG kept going down. I think it's because it's a new IPO stocks. So if you look at NIO, for example, this was when it was IPO. It looked like it had formed a bottom, but once it broke out of the bottom, it seems like it can go on for a while to reach a bottom before rising up again. We can also see another example of Xiaomi. Once its IPO, it just kept going down and couldn't find a bottom until actually 1 year later, forming this round-shaped bottom, okay? Now, if you compare with YSG, it looked like it formed a bottom here, but once it broke down the bottom, it would need to continue reaching lower low to see where is the bottom. And the sign is that it would drop slower and slower. Sometimes it can form a round shape, but the dropping needs to slow down first. Now let's find another example. Let's put EH. It was the big run-off of EH actually makes the Chinese stock look like flat. So we can't see whether they are related at all. It looks like EH is completely doing its own thing. Might be more related to the sector of eVTOL. Okay. Now let's look at LKCO. Same thing, we can't see the line anymore because it's too big of a run-up. It might perform quite differently, which is understandable because right now it relies more on the news. On the side note, there is good signs of LKCO. This is the NAV info, the leader of the HD map in China. So we can reference the market cap with LKCO. It is 36 billion RMB now. I remember last week when I showed you, it was around these days. So it was still 14 yuan, somewhere here. And then after a few days, it had a great run up. If the sector of HD map performed well, I think it would also affect LKCO. But right now, the premise is that LKCO need to pass all the political issue first. But if you zoom out the NAV info, it had a crazy run up in 2015. And ever since then, it was just consolidating here in this range for quite many years. So the day it breaks out this area, it might be the time that HD map can get more attention. Now let's look at Baidu. So for Baidu, it's quite related, obviously, because it's one of the heavy position in the ETF. And Baidu is a big tech company that can influence other Chinese stocks. And Baidu is a great company anyways. And let's look at Zepp. Yeah, it's somewhat related, except that starting from mid-March, it's been dipping more after the earnings. So the split point was really exactly at the earning. Now let's look at the new stock that I mentioned, Miniso. MNSO. So Miniso actually have been performing better than the big tech recently. Maybe it has something to do with the recovery factors that retail can benefit from the recovery of economy. That's my assumption right now. Let's look at one more, BYD, BYDDY. So this has been performing better at first and then later drop harder. I think it's because of the chip shortage, but right now catching up again. You see, it's getting closer and closer. I think it has something to do with the recent news of the Huawei L4 autonomous drive. It has been helping a lot of the new EV companies in China. Their share price has been rising. So that's what I want to show you today. I see good signs for Chinese stocks to rebound, and you can use this method to see if your stocks holding can benefit, if it's true. So you can think about evaluating your portfolio, especially the short-term investment. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you in my next video. That's it, guys. Hope you can find my videos helpful. make sure you subscribe to my channel and give me a big like. Thank you.